Hi everyone. Very good evening to all of you present here. I am Rishabh Kanpalia, the tax expert associated with the Clear, and my area of expertise is income tax. Thank you guys for joining. Now let's begin our session and make. I'll try to make this a more interactive one. And in case if you have any queries during the session, you can just drop down in the chat box. My friend colleague Sekat is there who will just answer your question. And once I am done with this PPT presentation, I'll be also taking some questions at the end. So let's start with today's agenda. Like all about our tax compliances, who should like file the ITR, and what are the benefits of filing the ITR, and like what are the ITR forms applicable for an individual for the financial year 21-22, which is also known as the assessment year 22-23, and what all documents are required for filing the ITR. Then I'll be covering few options for the tax savings, and then I'll be heading you towards the how we can file through the Cleartax. And in the end, I'll be taking few questions. So today, firstly, let me tell you the due date for financial year 21-22, which is also known as the assessment year 22-23, is 31st July. We should not be delaying in filing the income tax returns. There are the benefits of filing. So I'll be just discussing that thing and like what are the benefits in the next slide. Like first of all, like before discussing that what are the benefits, we need to find the eligibility, like who all are eligible to file the ITRs. Not everyone is eligible to file the ITRs. Anybody whose total income is exceeding the minimum income limit, that is rupees 2.5 lakh, must file an income tax return, even though the tax due may be zero. So a person who is around 2.5 or anything below, like 2.4 or 2.3, he needs to check his other income. Like other income, by other income I mean fixed deposits, saving bank interest, or the capital gain income. In case if it is there, he need to consider that thing before taking like for in the 2.5 lakh limit. The next thing here I'll be taking is person who will even if their income is less than 2.5 lakh, he need to file the return if TDS has been deducted for it. TDS may be deducted for any purpose, and he can claim that thing because since his income is less than the minimum basic exemption limit, he need to consider that thing for claiming the refund. The next will be ITR is mandatory if you want to carry forward the losses. By carry forwarding the losses, I mean here in case if you have any house property loss or any capital loss, and in case if you want to carry forward that to set off with the income in the next year, so you need to file the return, and that too you need to file that return on time. So any capital gain loss if you are incurring, if you want to carry forward, it can be carried forward if you are filing the return on time. That is for the next 8 years, it can be carried forward. And in case if you have you can, in case if you file it on the time, so you can avoid the dues which are penalties or the penal interest for that thing. Apart from this, the person who is applying it for the visa, or in case if it is he is incurring any foreign travel expenses which is exceeding 2 lakhs, or in case if you have incurred electricity bill, if you have paid like more than 1 lakh in a financial year, or any person who has deposited around like 50 lakhs in a savings bank account interest, or 1 lakhs in a current account, he will have to mandatorily file the income tax return irrespective of the limit, that is 2.5 lakh. These are the mandatory persons these are the mandatory conditions who need to file the return mandatorily. Next things we'll be moving ahead, like what all the forms are applicable. Generally, there are 7 forms. Out of these, only 4 forms are applicable for an individual. So, in case if a person is an resident. I'll talk about the ITR one. In case if he is a resident individual and is having a salary income, and but the salary income should be less than rupees 50 lakhs, and he including other sources, his other income should be also considered. In case if you are having any other sources and only having one house property, then ITR one will be applicable to him. Apart from this, in case in if his agriculture income does not exceed rupees 5,000, then also he'll have to file ITR one. Any conditions which like otherwise which is not covered here will be covered in the next form. So ITR one, we have only three conditions. We need to check it. In case if salary does not exceed rupees 50 lakhs, other sources income, and he is having only one house property. By one house property, I mean in case if one house property is on rent he has given, and any rent is coming, so he can include that one house property here in ITR one. Moving on ahead, next to ITR 2, all the conditions which were not covered in ITR 1 will be covered in ITR 2. Like anything which is capital gain, in case if he is having any individual is having any capital gain, or in case if he is a director, or in case if salary is exceeding rupees 50 lakhs, or having any foreign travel expenses, or foreign assets, then he ITR 2 will be applicable to him. Moving on ahead to the next form, that is ITR 3. ITR 3 is applicable to a person who is having any business or a professional income. By business or professional income, I mean the income of FNO and FNO and intraday trading will also be included. Any person if you who is dealing into the share market and doing intraday trading or futures and options, and if he is incurring any income or losses from that, then he need to file ITR 3. Moving ahead, in case ITR 3, if he is a partner in any firm, then also ITR 3 will be applicable. And in case if a person is not going for an ITR 4, that is his income is not under the presumptive income, is less than 50 lakhs, so then he can go with the ITR 3. Moving ahead, ITR 4. By ITR 4, I mean the presumptive income. By presumptive income, here is the opportunity provided by the government for any business or profession. For any individual who is carrying on a business or profession, he can file ITR 4. By his business and profession, there are the threshold limits defined by the government. For income like business, if you are carrying on any business and your gross receipts is not exceeding 2 crores in a financial year, and then you need to specify that minimum net profit of around 6% and 8%, 6% or 8%. By 8%, where you have received all your gross receipts in cash, and in case if you have received any receipts other than in a mode other than the cash, then 6% is the limit you need to show. Supposingly, I'll give you an example here. If you are having a turnover of gross receipts of around 40 lakhs, 40 lakhs. So if you are receiving 30 lakhs to the bank, so 30 lakhs into 6% will be represented as a, since you are receiving it through an banking mode, banking channel, will be defined, declared as 6%, and rest 10 lakhs will be declared 10 lakhs into 8%, since it is received in cash. So when you are filing with Cleartax, you don't need to worry about choosing the right form, because it automatically chooses the right form as soon as you provide the input, whatever income documents and you feed in, it will automatically choose the applicable ITR to you. Moving ahead, what all documents are required for filing an ITR? So the first and the foremost document required for the filing of ITR for a salaried person is Form 16. This form is provided actually by the your employer. It contains all the details of your salary paid to you and whatever the tax deducted and what is deposited to government. In case if you have made any declarations like investment declarations, that will also be covered here. Form 16 is generally provided at the end of the financial year by the employer. I am just presuming that till now you might have received your Form 16. And in case if you receive the Form 16, then do not delay in filing the return. It will have all the tax deducted. So in case if in case if any deviation is there, you can cross verify the Form 16 with the Form 26 AS. And in case if there is any deviation in the TDS, you can contact your employer and you can inquire about the same. The next document is Form 26AS. The Form 26AS, you can download it from the income tax portal. You can log in to your income tax portal under your file returns. You will find View Form 26AS. You need to download it for the relevant assessment year. Like for this financial year 21-22, the relevant assessment year will be 22-23. So you need to download that thing. And it will have all the details of the tax deducted. Like it will contain your other incomes also. Other incomes includes the saving bank, fixed deposit interest if you have incurred, any dividend if you have received. So whatever other incomes you have apart from the salary, that will, and in case if any TDS has been deducted on that thing, so that will also be available in there on Form 26 AS. You can cross, likewise I say, you can cross verify the TDS amount which has been deducted on your salary here with the Form 26 A in, which is like appearing in Form 26 AS with your Form 16. Recently, like from previous to past 2 years, uh, form income tax has come with a new document called AIS, which is also which is known as annual information statement. It actually covers all the transactions which are linked with your PAN. It includes your salary, it includes your saving bank interest, it includes dividend income, any FD interest, and in case if you are dealing into shares or mutual funds, so all the sales and the purchase transaction which you have undertaken during the year, generally it will have all the bank statement, bank transactions majorly into this, which you have incurred for the purchase of any sale of shares or mutual fund. It will include everything here. So while filing the return, we need to see this document because it will have all the incomes covered here. So you need to take all the incomes into consideration while filing the return, because income tax department is making this document as a base, and they are cross verifying all the incomes from there. Generally these documents are required for filing, but you do not have to submit this to the tax department while filing your tax return. You just need to feed in the figures from this document and to make your return. Moving ahead, these were the foremost and important documents. Apart from these, there are other documents also. I'll just go through the I'll just let you know what all other documents are required. It like if in case if you have any FD, so FD interest certificate is required. In case if a person is having any home loan, then he can demand the home loan interest certificate from the bank. And in case if any TDS certificate has been issued, that is known as the Form 16A, uh, that needs to be for having, in case of any person TDS has been deducted, he can demand from the other party, and he'll have the proof that he is has deposited the TDS. In case if he is having any interest statement from the past, we can download the bank statement, passbook, and for the interest on the saving bank account. In case if any declarations have been made in the Form 16, so all the documents which have been provided for the, as a proof of deduction, that needs to be kept ready. And in case if a person is dealing in a capital gain, like in case if a person is dealing into a share market, so there's a report. Like in case if you are using any application, maybe it a Zerodha, maybe it an Upstock, you after a year gets over, you can download a statement called a capital gain statement, which is also known as a profit and loss statement. That is required for filing the return. All the income, or even in case if you have incurred a loss and you need to carry forward that loss, you can provide the same. Like you can download the statement and provide the same thing for filing the return. You can next thing in this thing, like what I told you in the initials, I'll be telling you the options to save the tax. So options to save the tax is also known as, these are the known as Chapter 6A deductions, or standard standard deductions. There's an ATC deduction, AT's deductions. We also notice this. Uh, EPF and PPF. So EPF, you all are aware about it. Generally, the Form 16, when you receive a Form 16, when, in case it already covers the employee provident fund account, like the salary of a person is receiving is always after deducting the employee provident fund. So he can claim the deduction of the same thing. The limit under ATC is 1,50,000. In case apart in case if he is paying any public provident fund, if any amount is contributed by his own, then he can claim that thing under ATC. In case if a person is not a salaried person, in case if he is making his own contribution, if he is an entrepreneur, he can make a contribution to the PPF and he can claim the same deduction under ETC. Next option is under ETC will be children tuition fees. And you can claim for the tuition fees up to 1,50,000 in case if the parent is making the payment, and it is only for the education which is within India. And it can be maximally claimed for two students, and the amount will be again limited to 1,50,000. Apart from this children tuition fees, we have life insurance premium. In case if you are invested into any policy, that policy must be insured approved. It should be approved by IRDA, and it can be in the name of either self or the spouse or the child. And whatever premium you have paid during the year, that will be allowed as a deduction under ATC. But again, the limit here will be 1,50,000. So you need to check with the limit. Apart from this, like it will consider LICs, it will consider all the unit linked insurance policies. Apart from this, we have another option in case if you have a home loan. If a person is having a home loan, so he will get the two deductions. Generally, EMI is divided into two things. One is the interest component and one is the principal component. So for the interest component, he can take the deduction under Section 24, that is income from the house property, and the limit for that deduction is 2 lakh. And in case of the principal component, he can claim that deduction under ETC. Again, here the limit will be 1,50,000. So both principal can be claimed as well as interest can be claimed. Principal will be covered under Section ETC. Apart from ETC, we have the NPS. A person, in case if his limit of 1,50,000 is utilized or completely filled, he can make a contribution. In case if you want to avail more deduction, he can make a contribution by himself to an NPS, and it will be again here. This limit will be 50,000. This is apart from that 1,50,000. So a person can overall claim 1,50,000 in ATC, and in another 50,000 in ATCCD 1B. Apart from this, in case if he has any contribution, he can shift. Like in case if he wants to make a further contribution, he can ask the employer to make a contribution to an NPS, that is Section 80 CCD2. This deduction here, there is no monetary limit. Monetary setting, the maximum limit is actually 10% of the basic salary. So in case if you are having a basic salary of 10 lakhs, so 1 lakh will be the maximum limit which he can claim in under 80CCD2. That is the employer's contribution to an NPS. Apart from that, moving on ahead, beyond ATC, we have ATD. ATD is for the health insurance premium, that is a medical insurance. In case if a person, if an individual is in case he makes any premium towards the insurance, medical insurance policy, either for himself or for the spouse or for the child. The limit allowed is 25,000 to him. And in case if he has an parents, if who are below the age of 60, then another 25,000 will be limit. And in case if they are above the age of 60, like parents are above the age of 60, so he can this limit of 25,000 will be extended to 50,000. So overall, he can make 25 plus 50, that's 75,000 as a deduction in case of his parents are above the age of 60. Supposedly, in case if he has a uninsured parent, then he can claim the medical expenditure incurred. Again, here the limit will be 50,000. Apart from this, ETCCD 1B, I have already informed you this is the National Pension Scheme. This limit is additional 50,000 apart from ETC. The next section is ETDD and ETDDB and ETU, which is generally for the differently abled family member or if the person is having suffering from any disability by himself, then he can claim the deduction under ETU. There is a flat deduction of 75,000 depending on the disability of 75,000, and if the disability is more than 80%, then it will be 1,25,000. In case if it is between 40% to 40 to 80%, then it will be 75,000. Moving ahead, understanding the new tax regime. So, the income tax has come with since past 2 years, they have come with the two regimes. The person, salaried person, can actually choose either he wants the old regime or the new regime. So, he has an option. He can avail this thing even if he has chosen in the initial year. He can shift to the new regime in case he has chosen old regime to start. He can shift to the new regime or the vice versa at the time of filing the return. But this option is not available, or like, but this option is available only once for the individual who is having a business or professional income. For the salaried person, there is no such restriction. He can switch anytime and number of times he can switch. Generally, the new tax regime has this leverage of 2 point, like here the tax is increasing by 5%, and here no deductions will be allowed. So, in case if you want to choose new regime, you will have to let go of your deduction. Since here the tax rates are less, but you have to let go of your deduction. In the old regime earlier, the income, if you have supposedly income around 2.5 to 5 lakhs, then the tax rate was 5%. And the same was same in the new regime. But in case if the income is 5 to 10 lakhs in the old regime, the income slab rate increased by 15%. That was 20% was and in the new regime, this 5 to 10 lakhs has been further bifurcated into two categories, that's 5 to 7.5 lakhs and 7 to 10 lakhs. So it has the tax rate is increasing by 5%. Like earlier it was 5% and then 10% and 15%. And in case of the income is above rupees 10 lakhs, in the old regime it was straight away 30%. But this has been further divided into three categories. If the income is 10 to 12.5 lakhs, 12.5 to 15 lakhs, or above 15 lakhs. So 10 to 12.5 lakhs, the interest rate, the income tax rate will be 20%, and 12.5 to 15 lakhs, it will be 25%. And if it is 15 lakhs, it will be 15 lakh and above, it will be 30% in the new tax. So, which resign to choose in case if you use a Cleartax income tax calculator, this, then you can like it feeding in all the details like what is your choosing the financial year, what is the age, and when you feed in all the details like what is the income, what is the total income, salary income, what are deductions you are getting, what is the other income. If you have mentioned all this, what all deductions you are claiming, will calculate your income from both from the new regime as well as from the old regime, and will give you a comparison which regime is more suitable for you. You can calculate it from the income tax calculator provided by the Clear Tax. I'll just give you an example like how to choose the tax regime so that you pay the lower taxes. Like standard deduction is allowed only in the old tax regime, and all the deductions, if you are claiming any deductions like I mentioned earlier, ATC or ATP, it will be allowed in the old tax regime only. So if you have any deduction, I have mentioned here the equilibrium limit. Here limit is like 75,000 137,500. In case if you have such reduction, then at this point, the tax at both the times will be same. I'll explain you with an example. Supposedly, a person is having a 10 lakh income. So under the old regime, a standard deduction is allowed. So standard deduction of 50,000, so the income will be 9 lakh 50,000. And in case if he has a deduction of 1 lakh 37,500 under EPC, that is all your EPF, all your insurance, and everything that is covered in the principal amount and if any tuition fees, all that is covered under APC. So 137,500 is that is the deduction. After deducting that, you have a total income of 8,12,500 in the whole return. So the tax on that thing is 75,000 and education is 4%, 3,000. So the tax comes up to the total tax is 78,000. But there will be no deduction allowed in the new design. And on 10 lakh salary straight away, uh, this 75,000 will be the tax as per the tax rate mentioned behind, and 3,000 will be the education cess. So the total comes up to the 78,000. So at this point, like I said, this is the equilibrium point, 137,500. If you have this much of deduction, then both the returns will be suitable for you. Anything above 137,500, then old return will be beneficial for you. And anything below 137,500, the new return will be beneficial for you. Moving ahead, I'll just tell you how we can file through. I'll give you the flow of ITR filing with the Cleartax. So when you visit the Cleartax portal or the Cleartax website, you will just have to click on the login. And in case if you have an ID, you just have to log in, or otherwise you have to sign in. And once you are done with that, you will see a like you see a tab upload form 16 now. You just click on that and you will have to drop your form 16 here in this box. You will have to drop your form 16. And supposingly if you have changed any job during the so you have to drop both the forms here. In case if your form is divided into form 16A, 16B, then both the forms will be dropped here. And by clicking proceed, and the next step, it will automatically fetch all the figures that are in the form 16. Generally, it fetch everything, but you can cross verify it saying with the form 16 that if all the deductions, all the income has been considered, we can once it is cross verified, we can move on to the next thing. We'll move to take to the next tab uh, where you have to feed in all your permanent information. Permanent information like all the first name, middle name, and the last name, the gender, date of birth, and the PAN number, father's name. You have to feed in that. In the next tab, you have the address. You have to feed your address and phone number and email. And moving ahead, your income sources. So by income sources, as soon as you upload your form 16, all the salary income will be fetched. In case if you have other income, you can put in the other sources. In case if you are dealing with the capital gain, you can show under the capital gain. In case if you have the home loan, there will be an income from under house property. You can take a deduction of the interest there up to 2 lakhs. And in case if you have any business or profession, you can fill in the figures in the income from the business and profession. Moving ahead, it will automatically fetch all the deductions which have been, all the declarations you have made in the form 16. It will be available from form 16. It will automatically fetch here all your 80 deductions. So in case if you have forgot to declare anything by at the time, or the due date for filing the declaration has been gone, you can make the additional claim here by filing the return, provided you need to have the proof. You don't need to have to submit the proof, but you can add the figure. Supposedly, in case if you have included 1,40,000 in the declaration you have provided at the time initially, and you had more 10,000 of insurance in your hand, and you want to claim that you could not provide the receipt at that time, so you can include that thing, and you can take a total deduction of find once the deductions are made, so I just earlier I told you what all documents are required. So Form 26 is what all details has been deducted. You can upload the Form 26 AS here, and it will fetch all the details which has been deducted. Right? In case if you have made any advance tax payment, or if there is any need of the if you have to pay the tax, there is a self-assessment tax. You can add an entry. You can fill in all the details which is required. That is the amount paid, the date, and the PSR code and Kala number in case if you have made any self-assessment tax and you need to pay that thing. You can fill in here in the self-tax payment. Moving ahead of this, the additional information is required. In additional information, two mandatory things required is you need to put in the Aadhaar number and then your bank details. Bank details contains your account number, your IFSC code, and the name of the bank. Here, you need to fill the bank details for the verification part as well, and for the in case if you have any refund. So you need to fill in the bank details so you can get the refund in that bank account. Moving ahead, you can proceed to e-filing as soon as you are done with filling all the details. We can click on the proceed to e-filing, and once we click on the proceed to e-filing, it will take you to this tab as the registration tab, where you need to check the PAN and the date of birth, and you need to request an OTP. So you have two modes. Either you receive an Aadhaar OTP if your phone number is linked with your Aadhaar, and in case if it is not linked, then you can check with the IT department OTP that will be coming on the income, that will come on the phone number or the email provided on the income tax portal. So you can go with any of the options, and once that is done, proceed to file. So yeah, this was it. How we can file for the clear tax. In case if we have any questions, I'll be taking. We have one question like how do we find tax from a previous employer? So in case if you have any previous employer, you'll be getting a Form 16 from your previous employer as well. We have one question: how do we file a tax from a previous employer? So in case if any tax has been deducted, we can that will be reflected in Form 16, and you need to demand for the Form 16 from the previous employer. So uploading the Form 16 from the previous employer will consider your income tax. we can claim for the deduction provided like for the insurance taken by the employer as well as the medical insurance. In case if you have missed to declare the investment and you have the proof, you have the document, so you can claim while filing the return. Claim for that. Do you have more questions? Okay. Thank you guys